you've got to be very, very clearly focused on what you want. And if you don't have a strong focus on what you want out of life, any road takes you nowhere. So if you have a very, very strong focus on that which you want and start to build a game plan around that, the next step is that action step. You have to take action. You can have the most theoretical, beautiful plan on the planet, but if you're not doing anything towards it, it's never going to happen. Hey guys, welcome to this week's Money and Investing Show. This week we are exploring the truth behind millionaire habits and how to become one. Not the habit, but the millionaire itself. Some really good content in here, guys. As always, please make sure you don't just take notes. Make sure you take plenty of action. We look forward to hosting you on the show. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitchell Olarenshaw.
Thank you for having me, Mr. B. Now, a few hard truths we're going to reveal today. We're going to be talking about the habits and the truths of millionaires. So what separates a millionaire from the average person? Not just about investing, but mainly, I think, primarily coming down to discipline, rituals, habits, processes, the stuff that you and I effectively live for, I would say.
I think you're right. It's a mindset thing to a large extent, and everything that's encapsulated within that. This should be fun. And look, obviously, there are going to be people out there that may not be in that camp in terms of their net wealth, others that are. And this by no means is a talk down or a condescending session. I guess we're just sharing some of the hacks, tidbits, or secret sauce, if you will, that have enabled us both to achieve that status, starting with nothing. And that means, success leaves clues.
That's right. And I think, our goal for all of our listeners here today is that if you do have a goal of becoming a millionaire one day, here's a little cheat sheet on how to get there. Or if you are a millionaire, how to then take it to the next level. Let me throw a curveball at you, a little shake up. If you had to put one word to this question, what would it be? What separates a millionaire from an average person? One word.
Discipline.
Oh, that was going to be my... Stole it. Okay, I'll match you on that. I'll say...
If it's the same, it's the same, because I'd suspect if you ask that question of most millionaires, multimillionaires, even billionaires, will be the same thing.
Discipline.
It's discipline.
I'll go discipline and time. Mm-hmm. Time is your ally.
You got to get started to get there for sure. Time compounds all of those things, but you still need the discipline to actually work out what it is you want and focus on it daily, which I guess is the most beautiful segue. Hey, I got my segue in before you. Takes us into where we're at. So what do you want to cover?
Well, let's talk about discipline then in more detail. If that's the overarching topic that we can both agree on as the secret sauce, so to speak, which is not that secret, let's face it. How do you build discipline for a start, AB? Let's talk to our own experience here.
I think, the way you do anything is how you do everything, and building discipline is a learned skill. Some people have a more natural disposition towards being structured in the way that they operate, others less so, but it is a learned skill. And I think there are so many sort of places you can go and pick up little notions along the line that all sort of weave into a bigger story as to get there. Very good example of this, James Clear, Atomic Habits. Never break the chain. That discipline of just being consistent in what you're doing day in, day out is one way of looking at it. And when it comes to, we're obviously going to be talking about money today. Sometimes if focusing on your wealth building is something you get round to every now and then versus something you look at consistently and regularly, the outcome you're going to get is going to be significantly diminished because it's something that requires focus. So, for me, I think, the key more than anything is, number one, knowing what you want, working out what your goal is, and that could be $1 million, $10 million, $1 billion, whatever it might be. And it's not just about money. Let's be clear on that. It maybe is getting started in assets that will enable you to build that, or assets that are going to enable you to buy your time back so you can have a millionaire lifestyle, if that's the way you want to put it. So you've got to work out very clearly what it is you want. Once you've worked out what you want, you've got to be obsessive in your focus on that. But you also have to be extremely flexible in the game plan that you have in play to make that a reality.
Interesting. I like that. So focused, but also very flexible.
Yep.
Can I add to that with respect to discipline? Because I would say that you and I are both very disciplined people. I heard an interesting comment from NVIDIA CEO last week. Now, NVIDIA, for those of you people who don't know, is the second largest company in the entire world. And he was talking about graduates coming from all these prestigious universities and colleges, and he said, all that I wish upon these kids is suffering. And everyone kind of looked at him and he said, let me explain why. If you haven't suffered, you don't have any resilience, likely. And the only way to build resilience is to go through hardship. Now, discipline is really hard. To keep doing something over and over again can get really boring and really tedious. My advice to anyone listening to this who wants that status of millionaire, it's not just about money, but everything else you do in your life, if you're disciplined at that, it's very likely that will flow into your money. So if you want to be a millionaire, go to the gym and exercise regularly. Trust me, it'll help you when it comes to work. If you want to be a millionaire, clean your house, look after your environment, chances are it'll make you feel better. All of those same roads lead to the same place.
I think it's about setting a standard, a personal standard in some way, shape or form, whether it's about diet, whether it's exercise, whether it's the environment you create around yourself. Look at the desktop on your computer. What does it look like? If it looks like a raw search ink blob test and there's just stuff everywhere, you're unfocused. And
That's right.
That notion of having a level of focus, I think, is really, really important. And I reckon moving into what some of the elements of success may be, particularly when it comes to discipline, is you have to control your own race and manage it. And that's very hard if you're an employee. For example, you go, well, how do I control my own race in what I'm doing if I work for somebody else? Make no mistake about it. If you work for somebody else, for the time that they have your hours contracted, for your time that you're there, you need to spend 100% of your effort focused on what they're employing you to do. That's, I think, from an efficacy point of view, something that's very, very important. Outside of that, that's where you focus on your thing. And that can start by really simple things like how you start your day. And so, for example, in our journal, Winning the Game, the Money and Investing Journal, one of the things that we talk about are things like segmentation rituals. And rituals might sound a bit hairy-fairy for a lot of people, but let's just call it segmenting your day. How you wake up, how you start your work day, how you close your work day, how you finish your day. So a very easy way of starting the day is to pick up your phone, which so many people do, and then they start the scroll.
Oof,
and
terrible.
Automatically it's going to have an impact on what you do, what you think about, and where your energy flows that day. And there are and look, it might be that you check your emails all of a sudden. If there's something in your inbox that's urgent and important, that's all you're going to think about that day, which may not necessarily be aligned to that which is your priority personally or work-wise for that day. So you can get your time hijacked. So I think it's important to start by thinking to yourself and being very clear on this. Okay, I'm up, I'm starting my day. What are my priorities today? And really thinking about them in that quiet time in the morning. We have a relatively limited amount of quiet time in our house in the morning with currently 5, soon to be 6 kids.
Oh, I don't envy you.
And getting them ready for school and breakfast and out the door and all the stuff that goes alongside that. But I think starting your day in a controlled manner. So now to give you an idea, talk about peek behind the curtain, not quite as sleazy as it sounds like. So my wife and I, we get up, I go make her a cup of tea, we have a cup of tea in bed, we chat about things that we have both got planned for the day.
You've done that forever too, but I remember you telling me this 7 years ago that every morning you made your wife a tea. It's obviously never changed, right?
No, it hasn't changed. Actually, Valentine's Day she made me one, so there's sometimes a bit of variety to that. Birthdays accepted, but we use that as our thing. It gives me a chance to put the dogs out. I like to hydrate, so I have a massive glass of water while I'm waiting for the tea to brew and all of that, and then we sit and have a chat about, okay, what do you got planned for the day? What's your day look like? She allows me the same. And so at least we have both got a level of alignment, which we need to for the sake of running the house, having kids, etc., etc. The next thing I like to then do, she'll go off on her pathway and be doing what she does. I go off on mine, so I'll have a look and think about specifically what it is that I have on my agenda for that day. And I don't mean a line-by-line breakdown of what's in my diary, but what are my big 3? What are the 3 things today I'm committed to achieving, and how am I going to go about doing that? And I start to have a bit of a think about that. I then look at news because I'm a news addict. To an extent, I've got much better at that. I also look at my positions in the market. So they're the sort of fixed points along the way. Now, one of the things I picked myself up on over Christmas, and you talk about discipline here, is suddenly it's holiday time. We were away camping or something, and then I'm scroll. Oh, the doom scroll. I've got to get out of this because it's just mush. So one of the things I used to do a heap of is Sudoku.
Interesting.
And what I do now, when I've ticked off my boxes, cup of tea made, chat with my wife, had a quick look at the news headlines as to what's relevant, check my positions, and instead of then moving across to the blue background white F as it used to be on the screen and having a scroll, I put my phone down and pick up Sudoku, and I do that. And it's really interesting that it's a total refocus. You got to focus on that, stops your mind drifting off onto other things, and I find that's a really nice way for me to kickstart. Talk about discipline, that's my thing. I can't train first in the morning because of the kids. When they're gone to school, that then will lead into exercise training and all the other bits and pieces and getting the day underway. But that, for me, is the disciplined and controlled way I like to start my day.
It's beautiful. And the thing is, it never changes. You found out what works, and you'll never probably change it for a long time either.
What about yourself?
Mine is one of two methods. I train a lot, so usually twice a day. If I'm training in the morning, wake up at 5 a.m., I'm out the door by 5:30 running or at the gym. Back home, healthy breakfast, shower, always cold, straight to work. Don't check my phone until I get to work. That's my goal. Interesting comment. I think it was Dave Goggins said, as long as you're at home, if you don't consume any outside media or social media, no one else can disrupt your day. So you're safe at home. It's all yours. I took that approach. I don't have social media for a start, but I don't check anything until I get to here. If I'm not training in the morning, it's pretty straightforward. It's up, cup of coffee in bed with my partner, same thing, because that's beautiful for our relationship, and we never really break that either. And then cold shower, meditation, breakfast, work. That's it, and it never changes, and that's what works for us. Perfect.
See, this is the thing, the consistency, and some people are looking at this going like, that's like living like a Trappist monk, which it clearly isn't, because I don't think either of us could claim monk-like status in the lives that we've led. But you know, that notion that, oh, that seems a little bit boring, or it's all a bit humdrum, and some people are really stimulated by variety. I most certainly am. There are certain things that you need control over to think. And if you're in a chaotic environment, and I've been trading floor, plenty of places that are very chaotic to be in, and it's overly stimulated and your brain is going left, right and center, if you've got the ability to create an environment like that which suits exactly what your agenda may be, and if your agenda is financial success or make more money or get a promotion at work or be looking for a property or next property or an investment, you've got to create an environment to really foster that. So I agree, the more you can control that in that way, the better. I mean, I work from home, so my home work balance is more blurred to an extent, but I do like the idea of not checking in on work stuff particularly, which I think is especially important in the evening. Is a great way to do that. So why is it important to have that consistency? If you think about, say, someone that's great at sport, you think about a professional golfer as an example, the way they walk up and address the ball every single time is exactly the same. The swing is exactly the same. There's a tedious monotony to it, which gives a consistent outcome. And I think if you can start your day with that you can control, and start your day in a measured way to ensure, you know, using the analogy, you're hitting the ball down the fairway, that's what you need to do, rather than wake up in reaction mode, overly stimulated by stuff that's not relevant to where you're at. And then you go, okay, what am I doing today? And the day's already lost. Yep.
I think it's the notion of living on easy mode or hard mode. Hard mode is the opposite to what people are probably thinking.
I know where you have a cold shower. I know how much you hate spending money, so it's probably cheaper to have a cold shower.
Yeah, that's 70 cents in the morning, right? So easy mode, hard mode. I think you do all of the things which control your environment. You get to work, you're likely going to be on easy mode insofar as things are already sorted out for you. You're in control. The hard mode is waking up, snoozing the alarm, not knowing where you're at, going on social media.
Right, there's one in itself. Right? If you're a snoozer, like that's just the most toxic habit you can possibly have. When your alarm goes off, get up. You want to get up later? Set your alarm for later. Get better quality sleep. Get up. If you start on snooze mode, you're soft. You're just delaying the start of the day because you don't want it to start, and that's a dreadful way of presenting yourself at the start line. You know, if you're going, oh, do I have to? That's not the best version of you that's getting there. So if you're someone that snoozes, you're listening to this, and don't get me wrong, we've all been through that phase, I'm sure, in life where you go, oh yeah, I'll just snooze. An hour and a half later, you're still in the snooze.
That extra 9 minutes, right?
And I wonder why they pick 9 minutes. I've never really got my head around that.
Yeah, I don't know.
It's like the default, isn't it? But get rid of snooze. If you're someone that snoozes, here's a small baby step towards your overall success in becoming a millionaire, multimillionaire. Never, ever be someone that hits the snooze button. Get up, get your day started.
Well, it's the first commitment of the day that you've broken. I set the rule 13 seconds out of bed. That may sound a little bit crazy, but it's the best way to do it. As soon as you wake up, you're out.
I'm not even going to explore what goes on in that 13 seconds.
You'd be surprised what you can get done in that time. Now, let's talk about the power of investing, because we can talk about mindset and discipline rituals all day long. Let's assume that you've got some level of discipline in your life. Things are relatively under control, AB. Next comes the stage of saving, budgeting, and then investing. This is the secret sauce because, as we know, you cannot save your way to wealth. You have to invest the money.
Got to get it working for you in a way that you're comfortable with. The best way to get comfortable with stuff is to get educated. You know, the amount of posts that we see on social, for example, where I don't like the risk of the stock market, I'm keeping it in cash. And you go, well, A, you're not earning any money on it. B, take out inflation. C, you're probably going to live longer, so you need to build a bigger wealth chest if you want to have a quality of life in retirement. So you have to get exposed to the stock market. Don't just simply jump into the stock market. Get educated. Or if it's not the stock market, it's property, same thing. Get educated. Work out what's going to happen, because it's one of those things, if you don't know about something, it's like the boogeyman that's outside. Once you realize it doesn't exist and you can manage risk, for example, then it becomes a lot easier. So saving is one thing, but you've got to take that step out, as you rightly say. You've got to get in the habit of building a war chest, having spare cash flow, budgeting, all of the things that we talk about ad nauseum on this podcast. But at some point, got to step off the start blocks, you know, and get in the race, and that is to actually get started, because the sooner you do that, you mentioned time is what you consider to be one of the secrets. The sooner you get started, you've got the ability for compounding to start happening for you. The later you leave it, the more you're going to chase the game, because the gap between what you have and what you need is going to be wider.
Yeah, and I think for anyone who's on the fence, let's say you do have some savings and you are ready to make an investment, property shares, doesn't matter what it is. And look, I made my very first property investment quite young at 21, and I know it's quite a scary thing to do, because there's all this money in your bank account that's about to then leave in one transaction. You don't really have control over it. You kind of do, but you kind of don't. It's a scary prospect. I remember when I bought my first property, AB, I was able to charge a pretty decent level of rent. It was fairly high yielding property, and I was living at home at the time. So the positive gearing I had on my property actually paid for the board that I paid my parents at home. Now, that property's increased in value. At the time, I was amazed that, oh my God, this investment that I've got pays my rent over here. This is awesome.
So without going into the numbers, nobody needs to know that. It's between you and the tax office. What's your percentage return from the deposit you put down to equity that you've built in that property by having the courage to step off the block at a young age and say, I'm going to do this? People are crazy, but young, should save up for longer, da-da-da-da-da. What's been your return versus your deposits? What's your return on investment?
Well, I know the property value has increased by about 40% since I bought it, and that was 4 years ago.
Okay, and you put, as an investment properties, you put 20% down?
20% down, and then that equity now is far higher.
You basically have double your equity of what you put.
Correct, yeah.
Worth doing?
Worth doing.
How many years could you have floated around and gone, I'll just have to Bali with the guys and go do this and that and have a bit of fun, I'm young, I've got to live, and miss out on that? That's one property.
That's right.
Yeah, interesting. You just got to get off the start line.
You got to do it.
Going. And that fear that people have, I think if I go back to, you've got to be very, very clearly focused on what you want. And if you don't have a strong focus on what you want out of life, any road takes you nowhere. So you have a very, very strong focus on that which you want, and start to build a game plan around that. The next step is that action step. You have to take action. You can have the most theoretical, beautiful plan on the planet, but if you're not doing anything towards it, it's never going to happen. If I take my dad as an example, my father was born, he's been on this podcast, in abject poverty. They had nothing, right? And his goal was he wanted to buy his house and pay it off outright as quickly as he can, which he did really quickly. I think he did 7 years or 8 years. And this is before you had all the there was nothing online, no internet. This was before you had all the sort of advisors how to pay your mortgage off more quickly. He just worked his guts out and got it paid off because that was his goal. And the drive and determination to work that hard and get up at 5 o'clock every morning, 7 days a week to do that is admirable. And he's not a particularly educated person, he's a pretty smart person, and he's got a great work ethic. And I think having a great work ethic in terms of what your action steps are, talk is cheap. One of our wonderful clients over in Western Australia, Anton Visser, a wonderful quote he gave me many years ago: talk's cheap, money buys the whiskey.
Crack it
Everyone goes, I'd love to have this. Okay, but there's a price of admission. There's maybe being disciplined, taking action steps, getting time working for you. But don't talk about it. Do it. You have to get started. You have to do it. It doesn't happen in your brain by osmosis. You have to take the action steps. And the fear that stops people is, maybe I could be wrong. Maybe I could lose some money. And if you do and you're young, it doesn't matter. You've got plenty of time to make that up. Just get started.
That's right.
Get out of your own head. Get started.
Let's transition that now into building multiple revenue streams, because making an investment and then making multiple investments is kind of that next step. So if you've just bought your first property or first set of shares, you're likely receiving a yield on those shares, dividends or options work. Property, it's going to be rent, right? The trick then is to start doing more stuff, right? And commercial, residential property shares, the list is endless. What's your advice for someone to actually begin that journey of not just being a one-trick pony?
Okay, well, let's start with getting started and then move it in from there.
Okay.
And we actually, just while we were doing sound checks and everything, our videographer, Chris, who's on the other side of the camera this morning, just told us a first-hand story. Mum's just read our book and she's about to buy an exchange-traded fund. Okay, so there's a good starting point, which is, make sure you don't edit this out, Chris, is a really good example of an action step where you've found out about something you've learned and you're following it through to make it actually happen. So it moves from being theory to reality. Step one on the board. Once you've taken the first step, which is the hardest one, everything else can flow from there. If you never take the first step, you'll guarantee you're not going to take the second. So there's a really simple example of getting some motivation in a lower risk way to get things moving. So becoming a diversified investor or taking your second, third, fourth investment. It's tricky to be very concentrated. At the same time, I think as an expert in your field, you typically get rewarded more. So if you've got a niche, whether it be property, whether it be shares, whether it be crypto, whatever it may be, maybe it's you're an entrepreneur and you do startups or online businesses, whatever it may be, you've got your lane and you've got to, I think, work that lane quite hard to try and scale it to spin off as much as you can. And that's probably where you're going to get the biggest return on your investment, and that investment would be your time or your expertise, either of those assets that you're bringing into there. Once that model has scaled and you're spinning off cash, that's where you then need to diversify. So let's say you've got a couple of properties already. You've got primary place of residence, which everyone has to have, and then maybe you've got one or two investment properties. Diversifying by location, I think, is really important. Diversifying by property type is also really important too, because different facets of the property market work in different ways. Single dwelling has probably done quite well in the post-pandemic environment because people want more space, but from an affordability point of view, multi-dwelling is something that is the go-to for most investors. So, you've got that kind of juxtaposition there. So if you've got multi-dwelling stuff, maybe start looking at some single dwelling things. If you've got 3, 4, 5, 10, which is great work on your part, and you're already well past the start line, you've already achieved millionaire status, but you're working past that, then some diversification maybe into a different style of property, whether it be commercial or something in that sort of space, warehousing, for example, buying something in your super that you can then rent back to a business if you have a business. All those sorts of things become the game plan. If it's stock market related, and you've got your first kickoff and you've got into an index ETF. Personally speaking, I love ETFs. I think they're a great way, not just of simplifying investment. So exchange traded fund is what an ETF is. And if you're not familiar with that, come and check out our education. We provide a swag of help on that. So effectively, instead of buying a share off the shelf in the stock market, supermarket, you can own an entire aisle or the entire supermarket, depending on how diversified that you'd like to be. And I like them because the margin for error is quite wide. You haven't got a stock pick. You can just get the right part of the market and generally do quite well from it. And you can then zhuzh them up with gearing if you so wish, or options, and you can be bearish if you want to be more sophisticated, all that sort of stuff. So they offer a lot of solutions for people. Maybe diversifying that basket out of just, say, like most people, Australian equities. Well, we're tuppence halfpenny in terms of the world economy. We're 0.8% of the world stock market. The S&P and the US market's 55%. You need to have exposure to that. So if you've got Aussie shares, then the next step in the thing would be for you to get some exposure to US stocks. And then from there, it might be specific nuances within there that you can gear into. But that's your next step in there. And that second step is an important one, especially if you've had success with step one, because the challenge is if you've been successful at something, stepping out of that lane becomes quite hard. And that's why I say, have your niche, get that flywheel built, get it doing really well, and then what it spins out, you then use to diversify into the next thing. That's probably a reasonable pathway. And what it ensures is you're leveraging off your natural skill set. Yep,
and it comes back to time once again, because this stuff all does take a really long time in most instances. To have 3 or 4 investment properties plus a share portfolio plus your mortgage and whatever else you've got, you need to be patient.
To your point, taking time, if you're impatient, which I think is something we can both put our hand up for as well, there's a disadvantage to that when it comes to property and property timing. I just had this conversation with one of my advisors fairly recently, and we're in a position where we're looking to do several property transactions at the moment. And he's got, no, we're going to step this out over time. And the reason for that isn't delaying for the sake of delaying, but sometimes there are market timing issues. Just like buying into a stock portfolio. If you go all in straight away today, that's your level in the market. You might choose to time slice that dollar costing, for example, over a period of time. And the same can happen with properties. Stepping your entry points in there gives you a bit of diversification from a market cycle perspective, especially, for example, not that we've seen a lot of it, if there's some structural weakness in the market, you might want to get in on that pullback rather than just load up in one go.
Got you. So what would be your best piece of advice for anyone wanting to build multiple revenue streams, AB, in different asset classes?
I think I sometimes meet people that have been victim of the personal development space where, here's my goal, I want 7 streams of income. It's like, wonderful, great stuff. What are they? Well, I haven't quite worked that out yet. And it's great when you learn about that in theory, the different buckets and all the things. And yeah, in theory, it's all great. Trying to do it in reality is actually quite challenging because we all have bandwidth issues, whether that's in terms of our brain capacity and focus, whether it's about our time, whether it's about money that we've got, whether it's about skill set or advice that we have around us to facilitate that. So again, get started, number one. Most important thing, just start. Just start is critically important. Get educated as that starting point of the journey. So step one should be to get educated, not to give you a get out of jail card for not actually doing anything, but to work out what it is you're going to do before you do it. Very, very important to do that. You can say, I'll learn as I go along. That can be a very, very expensive mistake.
Oh, yeah.
So number one, get educated and then get started. Number two, once you've got your niche, something that feels comfortable to you, I guess exploit that as much as you can. Get it built again, or scale it so it's spinning off free cash flow. And once you've got that to a level whereby it's spinning off good cash flow, the next thing is, guess what? Back to step one, learn about the next thing that you're going to move into, and then ease into that as your diversification. And then when that gets to a level that's spitting out whatever cash flow that you need from it, then look at number 3, number 4, number 5. And it's a very sequential way of doing it. Most people's number one is their job. Or if you own a business, it's your business. Be very, very careful with insolvencies running at the level they are right now. You have to look outside of your business for different things too.
Totally.
Second to that, for most people in terms of asset allocation, would be primary place of residence, and then possibly an investment property or two. And then usually it's the stock market in the next place. If you don't have the money for a deposit for the stock to get into property, often the stock market will come before then because the resources you have aren't sufficient to play those other games. So you're using that to build to go there. But that's a reasonable pathway. Don't have a goal of 7 streams of income. Have a goal of getting one working really well. And when it does, go back to the snakes and ladders, back down to the learning process, and then starting again in 2. And look, we know from experience that's quite hard for a lot of people because if you've achieved a level of success, okay, so let's go back to the premise of this. This is about mindset hacks if you want to be a millionaire. Let's say you're already a millionaire. Going back to square one, the most basic thing is painful. It's an ego blow because I'm already a millionaire. I don't need this sort of stuff. But the devil is in the detail. It's in the grasping the most basics and getting world-class basics laid in. That's where success comes from in the next pathway. And I've had challenges with that with successful people in business that start trading because they don't know anything about trading. They got to start from the ground zero. Really hard. And anecdotally, firsthand, I joined Masterclass over Christmas, which is absolutely fantastic. Just to have not just anything, to learn new things outside of my lane, my comfort zone, and it's good from a conversational perspective. Mm-hmm. It's good from general knowledge.
Nice.
And I started on one, and I thought, geez, this is really basic. I already know most of this stuff. No. You're just doing what you just said not to do. Yeah. Take it back to ground zero and learn it from the ground up. And it's actually been quite cathartic in doing that. And taking it, stripping it right back. Yeah, I know this. Actually, I didn't quite know that after all. So what you think you know versus what you know are two different things.
Yep.
Very hard when you've had a level of success.
Absolutely. But ditch the ego. There's the best piece of advice. Another mentor of mine said, don't have an ego. If you have one, if it's too big at least, you'll never get anywhere.
You have to have confidence and self-confidence, particularly if you're going to go after something. And there is a massive difference between self-confidence and ego.
Totally.
Self-confidence is self-belief. There's a very crude definition, and as I see things, self-confidence, self-belief is extremely important. That's going to get you to where you need to be. Ego, that's where you start to care about other people's opinion. And the best thing in life people can do is give away the good opinion of other people because it will hold you back more than anything. Why are you doing that? Oh, you shouldn't be. Who do you think you are, the rocker? Forget them and what they're doing. That's where ego creeps in. It's all about self-confidence and self-belief. Keep it healthy, keep it strong, keep it positive. Ego, that's where you get bruised because of other people's feelings. best thing you do is kick that into touch. It's a great millionaire habit. Appreciate your opinion. Thanks for sharing it. Now I'm going to get back on with what I'm on.
That's right.
Really, I'm not getting blown off course by someone that knows nothing and has done nothing. They just want to pull you down.
So before we wrap up, AB, final question for us to explore here. What are some common mistakes that people make early on in the journey of becoming a millionaire? Impatience we've spoken of, that's a common one.
It's a tricky one because the whole premise of this conversation is you must take action. At the same time, it needs to be, I'm not going to say the right or perfect action, but it needs to be in at least the right part of the library.
Yeah.
So you need to learn, you need to be educated to an extent. Starting without being educated can prove to be very expensive. That said, getting educated and never starting is even more expensive. So it's a bit of a balance up between those two as to, what's the right order, get started or get educated or both. And I think, getting educated as you're starting is a good thing. Start small and then build up and on in. But those two things really do sit inextricably linked together. Miss either of those, getting started, never starting, that's a disaster zone. Not getting educated, that's a ticking time bomb. So they're slightly different in the problems because you'll get problems down the track if you don't know what you're talking about. So they're two for me that are essential steps. Giving away what other people think. You need people around you that are going to be supportive. And you need it I think Napoleon Hill talks about this I think it's in Master Key to Riches, I'm pretty sure. And it talks about that mastermind alliance. Get around people that are supportive, a good accountant, good advisor, a mentor, people that are on the same journey as you, people that have got a genuine interest in your success, and bouncing ideas, peer group type things, mentoring type groups. They're very, very handy. They're people to listen to because they're on the same pathway. And they're going to support you with feedback that's objective to help you get on your pathway versus, let's call it the general population, which might feel that they get more satisfaction trying to pull you down or hit you with negativity, which then affects your ego, which can then bleed into your self-confidence if you don't truly believe in what you're trying to do. So give away the opinion of other people, get a good group of people around you.
Nice.
And bounce off that, and you will thrive in that environment. And look, becoming a millionaire seems a lofty goal when you've got nothing, and I started with nothing, minus nothing. I know what it's like. It's hard. These days, it's getting easier and easier because that dollar amount is actually depreciating in terms of what it can buy. You think about $1 million property, would have been a 250 grand property 20 years ago, 30 years ago. So, the goal years ago of being a multi-millionaire, now it should be a more attainable thing. I know that's going to be controversial, but that's thanks to inflation. Millionaire status isn't what it was.
Indeed. I'll add a couple on if I can to this common mistakes. One piece of advice which I got from the same mentor I was talking about before is that you have to have a good running partner. I think people make the mistake of getting into either a friendship or a relationship romantically with a partner that doesn't have the same financial goals or expectations aligned. That can make or break you, because if you're trying to keep up with the Joneses, trying to satisfy your partner or their desires, if they're a spender, you're a saver, or whatever it may be that there's friction, that can really hinder your progress. I would say.
Very, very much so. You're kind of swimming against a current. May not be a big one. And it's a really valid one. And I guess it points to, the old adage, opposites attract, but that's not strictly true.
That's not true, yeah.
Birds of a feather stick together. So I think, finding someone that's at least on the same page, maybe not exactly on the same line of the book as you are, but close to it, makes life a lot easier, because then you're not fighting a rearguard action at home.
That's right. And my last piece of advice, and this is fairly general, it's not advice by any stretch, but never sell.
That's an interesting one, eh?
Never sell.
Never sell. I've got buddies that have been in that space, never sell anything, cars, real estate, anything. They're just hoarders of assets.
That's right.
And one of them is, he's got a couple of nice planes and a couple of choppers. He's done quite well with that philosophy. Again, someone that started with nothing, incidentally, his farm kit. So,
it's tempting. Yeah, we just spoke about my property value before. It's very easy to say, if I sold that, I'd get X and then I'd be able to do Y. But that wasn't my plan. My plan when I bought it was that I wasn't going to sell it for 30 years. So even though the temptation's there, never sell.
Yeah, I failed that one. I'll give you one example, because at the end of the day, we're fallible too. We make,
of course,
and there are only mistakes if you don't learn from it. And I share this story with everyone so they can learn from it as I have. So I sold out of my Netflix shares for $275, and I did a lap of honor on them. I was like, how good is that? And I banked a really decent profit on it. I'm like, how good is that?
Yeah.
Remind me, current price?
1,000 plus. At least, and charging. Not to rub it in, of course.
And the old adage, you can never go broke making a profit, is true. However, sometimes if you just let things be and let time work for you, which is the most crucial thing with any kind of investing. If you buy good quality assets, that time will work for you. The challenge is getting off the start line and buying those good quality assets. To do that, you need to save, and you need to have the confidence to take the action step. And all of that starts by not hitting the snooze button and getting on with it.
Sage advice, AB. Thank you very much for the discussion today. That's a cracker.
Anytime. There you have it, guys. Make sure you like, comment, subscribe. Most importantly, hit the notification button, and we'll look forward to hosting you next week.